Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today we are talking sticks, specifically candlesticks and candlestick patterns. And, what would a day be like not looking at candlestick patterns? Well, I don't know. It would have to be a vacation day because I look at candlesticks and the messages they tell me each and every day. So this is one of my favorite classes in the series. We're going to quickly look at what a candlestick is, how it's formed, and then we're going to spend a lot of time looking at different charts. So if you have a particular chart you would like me to use as an example, feel free to type it into the chat. I want to thank all of you who continue to show up here each and every week, both the brand new people, and if you are brand new, feel free to type a greeting into the chat so we can welcome you. And to those I affectionately refer to as the usual suspects who come time after time and are always looking to improve their knowledge and pick up new things. So to Paul and Marcia and Josh and Lakshmi and Will and Trader Joe and Jay and Sam and Paul and Richard and Josh and the rest of the gang, thank you all for being here. I'm just going to make some notes as we go along of the ticker symbols that you guys are putting in. I encourage you also to follow us in the land of X. And by us, I mean Scott Thompson and I. Scott Thompson is a friend, is a fellow coach, and actually a manager here in the coaching area. And so if you're not following he and I both on X, then you're missing out. Scott Thompson CS and Barb Armstrong CS. I just did, a training like watching out for scammers and that kind of stuff yesterday. So it's kind of top of mind. I haven't seen one in a few weeks, but sometimes we will have people who pretend they're us and they'll reach out to you and offer exclusive trading, trading for a fee. They'll offer to trade your account on your behalf for a cut of the profits. Like, never give somebody your sign-in information. They'll offer you a crypto or a Bitcoin deal. If anybody pretends they're a coach and they're reaching out to you, just know that no coach at Schwab would ever do that. If somebody reaches out to you and says that they're me or Scott or someone else. Just as a quick reminder, we're going to look at a lot of charts today, but know that everything we cover in this class is for general information purposes only. And, none of it's to be construed as a recommendation on the part of Schwab or myself. We're not endorsing any particular stock or chart pattern or investment strategy. We use the Paper Money software application on the Thinkorswim desktop platform. And it is a great place to learn and hone your skills and make sure you understand both the platform and what you're trying to achieve in Paper Money before you consider trading in a live account. Stop loss orders don't guarantee that you're going to get out at or near the price requested. I'll be talking about that Friday and trading a smaller account because we had placed a swing trade on IBM and it went down by 25%. Today, you want to talk about a gap. There was a gap. Anyway, we teach this in about a 9-week series, and sometimes interspersed and sometimes at the end, we'll add some additional content. So we'll often do one on Bollinger Bands, we'll do one on Fibonacci's, we'll do one on the 8 things I wish I'd known when I started trading. And so, don't think that if you're here for the first time, and I saw that Grace said this is her second day and she's still feeling new. Like, Grace, I hate to tell you this, I started as a client of this education back in 2011. So it's been 15 years for me, and sometimes I still feel new, like I'm still learning as I go. So if I can give, I don't want to say advice because we apparently don't give advice, right? But one recommendation might be to just keep coming back consistently. And my analogy is if you invest an hour a day into trying to figure this out as opposed to, 5 hours on a Saturday, like you can't go to the gym once a week and try and get into great shape. You're better to show up for an hour a day. So just keep coming back and things will start to fall into place because at the beginning you have this huge framework and there's not much in it. And as you keep coming back, you know, and you come through this rotation again and again, you'll hear things you didn't hear the first time because you were so busy listening, thinking about what I just said that you missed the next two or three things. And that's kind of the way things go. Okay. So today is candlesticks. And what's a candlestick? Well, this body here, you know, this rectangle, we call it the body, and it shows the relationship between the open and the close. And then we have these wicks at the top of the bottom, and they indicate the high of the day and the low of the day. And, you know, when we see that this body is white or green, it shows that, you know, we have, or if it's a clear body, that it opens lower. And, you know, it may have traveled up and down and all around throughout the day, but that at some point it went all the way up here. And at some point it went all the way down here. And then by the end of the day, it closed here after opening here. And so that's what this candlestick pattern tells us, is that we opened lower, closed higher, and the high and the low show us where we traveled over the course of the day. Okay. Let me just erase that. And on we'll go. So when we have a red body, or on some charts, it may be a black body, it just shows us that the open and the close were flipped, and that we in fact then had, let me just change this color. We then had it open and then fall throughout the day. And, you know, and it may have opened and then come up here and been higher and then come down here. And then it comes up and it ended up closing here. So open, close are high and low. And it's just a visual way of easily being able to see kind of where a stock traveled price-wise throughout the day. And one of the things that was new to me, and in the beginning, kind of everything is new to you, right? But there are support and resistance levels, and we've talked about support and resistance over the last couple of weeks. But when we look at this idea of support and resistance potentially being aligned, you know, and that we can look at this and say, oh, okay, I hadn't considered that this could be a support level, you know, that this here could be a support level. And if we're bullish, you know, and we're expecting the stock to continue to move to the upside, but it could come down. And we consider this level here to be support level 1, the bottom of this candlestick to be support level 2, and the low of the day to be support level 3. Okay, so these are support levels. Now, if you're bearish and something has come down and we're looking at it rallying, we're looking at this being the first ceiling or resistance level. Think of support as the floor, resistance as the ceiling. And if it breaks above that, we're then looking at this as the next potential hurdle it has to get past, resistance level 2, and then the high of the day being resistance level 3. And particularly when we have an extraordinarily big candle, these tend to come into play. You know, less so if it's a doji. And if you're not sure of what a doji is, you're in exactly the right place, because we're going to talk about that today. Okay. So we have, you know, combinations of candles and candlesticks, and not all candlesticks are created equal. And, you know, we can have small candles like we're seeing here, and then we can have big candles. Like, you know, like these, I would say, are all looking like, you know, these are all large candles. Well, what makes them large? Well, because they're a lot bigger than this small one. You know, you know, it's not complicated. It's just you're eyeballing it and saying like, wow, that's a big candle. Like if we were to look at, I think JP Morgan. So I'm just going to bring that up. Oh, I guess I needed to get these, clear those so they're not cluttering up our chart. But if we come and like look at IBM today, down 25%, crazy. There's a whole story behind that, but we won't go into that now. But when we look at JP Morgan, and we look at the last several days, would we call this a big candle? Yeah, we would. And would we call this a small candle? Yes. Small candle, yes. And these candles have other characteristics, and we'll get more into that in a minute. But the bigger the candle, the bigger the either buying pressure when it's bullish or selling pressure when it's bearish. Okay, so if it's a large red candle, heavy selling. A small candle indicates that, if it's a small red candle, then we're saying, okay, well, the selling pressure, the bears are still willing over the sellers are still winning over the buyers, but it's a slight win. It's not a major selling pressure win. And large and small, they're relative terms on both, the buying side and the selling side. Now, this, I call it a cheat sheet. It's really just a summary, and I posted this on X today, for your reviewing pleasure. And I used to have this taped up in my office, and I'm a bullish person by nature. Um, but so I think of these, whether they're bullish or bearish, as a hammer and an inverted hammer. So, but what we call a hammer at a support level, we call a hanging man when it happens up at resistance. And an inverted hammer at support, we call a shooting star. And however you remember them, it's not the name that's important, it's what it's indicating. So with this hammer, what this is saying is, or this inverted hammer, it's like the sellers are getting weary and the buyers may be about to show up. And with these candle patterns, what we're waiting for is confirmation, and that confirmation might be a close above the high of the low day. Now, with the hanging man and the shooting star, we're saying, hey, the buyers may be struggling from some buying fatigue, and we could end up with a bit of a pullback. Now, it may be setting up a bull flag, or it might just be a one-day pullback or a 2 or 3 day pullback. It could be a reversal trend, but we won't know that until it plays out. But here, what we may be looking for is a close below the low of the high day. And so, as in many fields or many sports, we will have, let me just close this one. I'm going to use this one today. And we're going to use this. So for these, we're looking for a close above the high of the low day, or a hold. So we're looking for it. So in this drawing, it's kind of faint. This day would be considered an entry where, it's closed above the high of the low day. Now here we're looking for a close below the low of, it's the opposite of the high day. Sorry, I can't write today. And that would have been this day or this day. The following day would have given us that entry. Now, a piercing line on the bullish side, this happens when you have a big down day followed by a gap down on the open, and then it rallies dramatically and it comes up through at least this halfway mark, or resistance level 1. So we want it to blow through that for it to really count as a piercing line. And dark cloud cover is the opposite. We want it to open higher than where it closed the day before, and then come down through this support level 1. which is that halfway mark. Now, bullish engulfing, we have a down day, and then it is engulfed the next day by a big bullish candle. So that it's engulfed the candle of the previous day. And with bearish engulfing, it's the opposite. We have an up day, and then we have the next day a bearish candle engulfing the previous day. Yeah, dark cloud cover and piercing line aren't as intuitive sometimes for people to see. And somebody said, I always struggle to understand those. But what it means is you had this down day, and then it gapped down on the open, and the buyers said, enough is enough. Like, this is a deal at this price, or I'm coming in and buying. And then they came in and they showed up in force. They showed up, in numbers. And the opposite with a dark cloud cover. The buyers, have been large and in charge for the last several days. And all of a sudden, people are going, you know what? I think I'm going to take some profit. This is getting high. And then the sellers come in and they're large and in charge. Okay. And that's what creates these candles. Okay. Now, a harami is kind of the flip of the engulfing, but it's where you have a big down day, and then the following day, the entire body of the candle is within the body of the previous day. And that's a bullish signal when it happens at a support level. And then if we have a big up day followed by this down day within the body of the previous day. Okay. And then the last one on this chart, and it's not like these are the only candlestick patterns we're ever going to talk about. They're not. But this morning star pattern happens when you have a down day and then a gap down, typically. Like, technically speaking, we want to have this gap down and then have it be a small candle, a doji type pattern. So this kind of looks like a spinning top, right? This candle of indecision where the bulls and the bears are duking it out and they don't really get anywhere. That at the end of the day, they're still about where they were when they opened the day. And then the following day, you want to have at least this kind of piercing line idea where, the further it penetrates, you want it to go at least halfway through, if not more, this first day candle in the pattern. And in this one, it blows right past it. The bigger this candle is, the better, the happier we'll be. And then the evening starts, like you've got this big, you've had this, I want to say boisterous, but you've had this significant uptrend, big candle, this candle of indecision, or this doji, this spinning top. And it can be, net bullish or bearish, but it's a spinning top where it gapped up. And then you want this down day to go at least halfway through this candle to technically be an evening star. Okay. And these are all reversal patterns. These are a sign when these bullish signs happen at this green line here on all of these is considered to be support. And this red line here on these bearish patterns is continued to be considered to be a ceiling. Now, it doesn't have to be a previous ceiling. It can be a new ceiling being established. Okay. Okay. So let's go and have a look at some charts. And sometimes I will say it's hard to find something that is textbook perfect, because I've been, setting up, and let me just show you this. We'll just take a second. I'll bring the charts up. And then I'm going to bring up just a blank screen and encourage you to subscribe to Trader Talks. There will be a button in the bottom right corner of your screen. And if you haven't done this already, one, you can bring up the playlist for this class. So when you first come, you'll be on home, and that will just show you what's currently being taught. If you come to playlists and scroll down to the bottom, for some reason, we've collected the Getting Started series at the bottom. So here's Getting Started with Technical Analysis. And you can see that the last 3 weeks, we've done lessons 1, 2, and 3. And then you'll see kind of interspersed throughout some short videos. But what I did, well, and I use that term "I" loosely, because there's a great team of people behind the scenes that actually make all this stuff happen. But we created a separate playlist, and I just called it the Trade Management Mini Sessions, because when I had time, I just record one of these short videos, and I grouped them in this folder called the Trade Management Mini Sessions. And we now have 14 mini sessions on these candlestick patterns. And so, what is a hammer? What is a hanging man? They're all between like 2 and 5 minutes long. So if you want to do some binge learning, and when I'm done with that, with these, then I'll do another series on different technical patterns like a head and shoulders and inverse head and shoulders and all of that. So, keep checking back here. And then if you're brand new to all of this, if you scroll down here, there's a bunch of short videos on just how to customize the monitor tab, how to customize a chart. There's how to add notes, and they tend to be in that 5 to 10 minute range. And then there's some example trading plans in here. But for our purposes today, I wanted to point out this collection of 14 shorts on the candlestick patterns. Okay, and this is another free resource that you can take advantage of. So I encourage you to check that out. Okay, so we were looking at, I brought JP Morgan up first. And what would we call this pattern? 3 guesses. Some might say it's kind of come down to a support level here. If we kind of back things up a bit, this stock was it went through this period of consolidation. And then some might argue that it set up a bit of this like inverted head and shoulders type pattern. And then it broke out. Let me just get rid of this line. So let me just get my drawing tool going. So inverted head and shoulders, which is a pattern we're going to talk about, in a couple of weeks. And then we had this breakout and then a retest. It came with earnings today, crushed it, but it opened lower. And then we have this bullish. Jay and Trader Joe, you guys have it. And it's also going to be a close above the high of the low day. Yeah. Yeah, so this is a bullish engulfing pattern. And we don't just want to look at this in isolation, because this could happen in a downtrend, but this is following this pattern of consolidation. And the way that a trader might look at this is say, well, this went from 282 to 325-ish. Because these are not finite numbers, support and resistance, and we've talked about that. But if we say, well, if this went from 282 to 325, if I take 325 and I subtract my 282, that's a range of about $43. So if we said, we might expect this to move up about $43. If we add 43 to our 325, that'd be about 368. And you might say, this hit a new high today, Barb. Why would we buy something when it hit a new high? Well, because there's an entry here. And this bullish engulfing pattern doesn't require another confirmation afterwards, like somebody saying, we have a hold here. It's closing above the high of the low day by definition, by the fact that it is a bearish engulfing pattern. So if we looked at this and we said, well, we want to define our risk, if we look at this as a potential support level, this 325, we could say we're going to put a stop if we buy shares of this 3% below that, around 315.25. And we're going to put our target, if we wanted to do a short-term trade on this, we're going to put our target up here at 368 based on this pattern. Yeah, and it's pulled back a bit, but it's still up. And you know, when we look at this, that's a pretty big fat candle, but it opened lower and it's moved higher. One thing, like if we do this as a stock trade, which is what we're going to do, we have time. So if it continues to go sideways for a hot minute, we're okay with that. But we're on the other side of earnings because it did come with earnings this morning. So I'm just going to erase this, clear my drawings. We're going to close this. And then I'm going to put in our target up here. And we're going to make our target, it was 376, wasn't it? 325 plus 43. 368. So we're going to make this our target. There we go. So we're going to come to our trade tab. And we've got how much in this account? Oh, that's our small account. We're going to go to our larger account. So we have almost 734,000 in this account. So we're going to say that a position size of 33,000. So 33 divided by 734,000. That's less than 5%. So we're okay with that as a position size. We are going to right click. We're going to buy custom with an OCO bracket. We're going to buy at the current price and we want to sell when it gets to 368. Or if it goes below 315.25. 15.25. We're going to make that good till canceled and this good till canceled. And that's our stock with a target. And it's based on inverted head and shoulder pattern. And our bullish harami, or bullish engulfing. Okay. Okay. Yeah, thanks, Scott. Okay, and this is not uncommon when, we have an earnings day to see, a lot going on. So Bank of America came, today we're seeing a lot of bullish engulfing and kind of things sometimes go in fits and start. So when we look at Bank of America, another financial stock, and this one was more of a cup and handle pattern, right? And it looked like we saw it breaking out and we placed a trade and we put a target here. I think this target was based on the Fibonacci. So we're using just all kinds of different technical indicators to help us make trading decisions. But this has continued since it broke out of this cup and handle pattern. Okay. So here's our cup, here's our handle. And this would have been like an $8 move, approximately. So 54 to 62, That would have been a target based on this pattern, and it hasn't quite hit 62 yet, but it's getting close, isn't it? But if we look at this, what is this pattern again, this two candle pattern? You know, it's a bullish engulfing pattern, isn't it? And, you know, it came with earnings today. So we could come over and look at the earnings reports to kind of give us some more information. So, and to do that, we can come over here to live news. I have this live news linked to the chart that I'm on. And so we can see, we can pull down here. Oh, let's close that one. And look at, you know, our analysts weighing in on this. We can see what the beat was. You know, the estimate was 113. Earnings came in at 121. The other thing we can look at is when we come to the trade tab, we can say, well, you know, what does the PE ratio look like on this? And you know, somebody looking for a value stock might be looking for something that has a PE ratio of less than 20. So we're kind of taking our technical analysis and marrying that with some other markers. And maybe you're saying, I want something that looks strong technically, but I'd also like it to pay a dividend. And this one pays a dividend of 1.86%. Now, with a dividend, there's no guarantee that it will continue to pay a dividend. And there's no guarantee with a stop, like on the last one where we placed a target and an exit, you know, that if we buy this and we put a stop on it, that it's going to get out at exactly the price that we're requesting. You know, and so if we wanted to, let's just say we wanted to add this to our portfolio and buy and hold, and I'm going to get rid of these because we had done, you know, a previous trade that's hit our target. We can get rid of this one also. But if we said, well, if we see, you know, this as a recent low, and why would I pick this? Well, we had kind of like this is a high, this is a low. You know, resistance, old resistance becomes new support. We talked about that. And then what's this pattern here? Well, this pattern would be a Harami. So this would have been considered an entry day also, because we had this big down day, and then the body of this candle is totally within the body of the previous day's candle. And that is a candle pattern that doesn't require confirmation. And as is this one, like if we're looking for a close above the high of the low day, well, we have it by definition. And so if we just wanted to add this to our portfolio, we could go ahead and add that. And where might we put a stop? We might say, well, the low on this day, this 58.30, we could put a stop. You know, you might want to make it 2% or 3% below that. If we use 3% as our example, 58.30 times 0.97, that's 56.55 would be our stop. And then we don't have to put a target. As long as this stock continues to do well, it's up almost 10% year to date. And, you know, today it's up 1.5%. That's a pretty big candle, but remember it opened lower. And so, you know, it looks like a big candle, but it's kind of half of this candle is making up to get it back to where it closed yesterday. So, and for position sizing, we might say, well, you know, if we don't want a position to be more than 5% of the account value, we could take our 733.8 times 0.05. We could have a position size up to 36,000. So if we said, well, if we buy 500 shares, that's about 30,000, we'd still, you know, not be compromising our position size. So we came to our trade tab, we right click, we want to buy custom with an OCO bracket, and we're going to, oh, actually, no, we're just going to buy custom on this one, sorry, with a stop. And again, stops don't guarantee that we're going to get out at a particular price, Our stop loss is at 56.55. And we're going to do 500 shares, which is about a $30,000 position, and come to GTC, make that a GTC. Now, when we come here, we say, well, we're risking about $4 a share times 500 shares. So we're risking about 2,000. Now, if it gapped down like IBM did today, we could lose more than that. But gaps down post earnings like that, they're not unheard of, although they're not that common, but we're attempting to define our risk here. And so we're just going to put that in our growth stock, or we could also put that in our dividend stock group, because this stock does pay a dividend, and send it in. Okay, so we have about 10 minutes left. Let's look at a couple of other positions. So if we look at Apple, so Apple, because I wanted to not just look at bullish opportunities. So we came up to a previous high, so also known as a resistance level. And now I'm going to get rid of that drawing. And we hit a new high for Apple yesterday. But what is this candle pattern? We call it a shooting star. And what this is saying is, hey, boys, the buyers may be experiencing some fatigue. It could end up pulling back. And what do we have today? It has pulled back by about 0.5% or about $2 a share. Are we surprised? No, because this candle told us to prepare for this. And if we wanted to place a bearish trade, and I'm not saying this stock has been moving bullishly, it's up 16% year to date, but it might be saying, hey, pay attention, because we could be setting up a bull flag pattern or something. So just watch. Now, let's look at CrowdStrike. So CrowdStrike, somebody was saying, I just find it hard to see these morning star patterns. But this little pattern here, this little chart of mine, is not picture perfect, but it's darn close, because we have this big down day, then it didn't, maybe it gapped down, on the open, but we have this candle of indecision, this hammer pattern, kind of close to a doji pattern, and then we have this big up day where it's not only come halfway through, it's blown way past. So a classic morning star type pattern, and it's come up above this high and above this high. So could that be considered a bullish potential entry? I say possibly. Dell. Now, Dell, I mean, it's up 260% year to date. Like, that's like ridiculous. But like, is this stock dead to us because it's moved up so much? Well, it went through this period of consolidation. We call this a pennant pattern. Then we had a diagonal resistance breakout out of that, pulled back for 2 days. And, if we're playing I Spy with my little eye, does that not look like a morning star pattern? So we had a down day followed by a candle of indecision, and then this up day, and we love it when it gaps up and then goes at least through the halfway point of this body, and it's gone through the whole body. Right. And so might this be considered a bullish signal? Now, Pan W, I'm putting an ish on this one. Well, let's just see how it looks. So, and why am I ishing? I'm ishing because it did gap down. So we had our down day, and then it did gap down on the open, but this is more of a hammer than a doji. but you know, it's kind of the sentiment of a morning star is there. And then we have this big up day. And so I'd say this is morning star-ish. Okay. Now somebody asked if we could look at NVIDIA. Yeah. And so with NVIDIA, some might say like these candles are a bit of a dog's breakfast, but you know, we've been marching up and these you know, the big candles are bullish. You know, we had a pretty small candle here. It looked like it climbed back above this level that's been acting as both resistance and support and seems to be moving on to the upside. Okay. I wanted to look at see me run, another banking stock, and then we're going to have to start wrapping things up. Well, okay, so this was a bullish engulfing when I started setting things up this morning. Yeah. And so you can just see what a difference a couple of hours makes because it opened here. So this was going to be a bullish engulfing example, and that is now like no longer the case because it opened up here today. And when I looked at this, you know, this morning between 7 and 9 o'clock, it was trading up here. And so this was this big fat bullish engulfing. And now it's come all the way down here. And, you know, it's breaking this, you know, this potential support line. It's broken right through that. So much for that one. But had we met first thing this morning, we might have placed a trade on that based on how bullish that candle was. And, you know, the day isn't over until it's over. So there we go. So no more bullish engulfing on that one. Okay, guys. Well, that is where we're going to have to call it a day. I appreciate you all being here. Just a reminder that when we put in a target and an exit, it's not a guarantee that we're going to get out at exactly those prices. If a stock gaps up, we may end up out at a higher price, which would be delicious, but we could also end up, if something gaps down, out at a lower price, which is, you know, not so delicious. And, you know, we looked at different candlestick pattern. We looked at a number of different candlestick patterns, and then we looked at those in the context of what else is happening in the charts. Because, you know, if we look at a stock that's downtrending, it could have a bullish configuration, but in the context of the greater trend, that may not have us wanting to pull the trigger and place a bullish trade. So there you have it. So guys, thank you. Hit the like button. It helps move things up in the trading algorithms. I want to thank Scott Thompson for being here. I want to thank the guys behind the scenes. And I want to thank each and every one of you for continuing to invest in your financial future by attending a webcast like this. Up next, swing trading with Mr. Mike Fairborn. Enjoy the rest of your day. Take care, everyone. Bye for now.